All right, guys. Want to jump over into a few things real quick. Want to make sure everyone's in here at first. This is going to be a live stream. We're going to be covering covered calls. So let's get some people over real quick. Go ahead and share this thing to everybody. Give me just one moment. Right here. Should be the link going right to it. So should be an easy session. Make sure all these guys are in right here. Jump over into a few rooms. Then we'll go from there. But Bison just hit it right on the head. All right, so got a few people in. Gonna let most of my buddies get in here, so still just checking it real quick. You can see, make sure you say something on here whenever you're locked in and loaded. Make sure Emily's on this link. Anybody that wants to come watch this live stream, this is gonna be real easy. I'm gonna cover a lot of things that are extremely important. You guys are gonna get a lot of information out of this one, okay? And it's gonna help you against days just like today as well. So we're gonna first start with skills. I do want to show you guys something real quick in this Discord. So you see Bison 548. He just showed you guys some covered calls, right? Just from last week. 40%. He's up on every single one of them. For Palantir, 36 on skills, open, INFI, and some other ones. You know, these are just going to continue. They'll be worthless by August 20th. That's guaranteed. All right, especially if any more sideways action happens, for sure going to be worthless. But on here, I will be able to see whenever you guys jump in and talk. So I'm gonna pull the YouTube right over here so I can see your chat, and I can see this at the same time. Make it a little easier, okay? So I'm just gonna post in one more place to make sure that everybody's on here that should be. So I'm gonna jump into my Facebook real quick, make sure everyone's on board, because I do want everyone to be able to have these covered calls down. It's one of the most important things that you are going to learn whenever it comes to being able to be a successful trader, because there's always going to be down days. There's always going to be times where you need to hedge yourself. All right. So looking at his plays, INFI, now this is a call. We made 100% on this play. Okay. Just for starters. So we'll start with that since that's the first covered call he was showing. So we bought this for the FDA catalyst. We got a very small starter right here. It was like a 1/10 of a position. I know that sounds crazy, but that's how small I wanted the position for you guys. Okay, I wanted a 1/10 of a position. So as it fell after earnings, because you don't want to hold any stock through earnings unless it's a YOLO call, okay? We bought down here near the 140, 145 range, and then this thing is 325, just hit the other day, and it still has upside even from here. If you look at it on the 30-minute or the daily, we're just now reaching 378 would be the major resistance. If it breaks that, this thing can push all the way up towards $6. So hopefully he kept that percentage of that position, and the way that you do that is by selling calls for the down days. So let's just say, for example, we'll look at which ones he sold. He sold $3 calls. So you look at this right here, and it's right at it. So he actually needs a little dip in the morning, but you know, no big deal. You can buy these back at any time. Okay, so say you buy this at $1.40 and this swings all the way to 325. Okay, and you go into this options chain for August 20th, and we'll use this call for an example. All right, so I'm just going to open up the call history on it. You'll see at one time these were worth a lot. These were worth $100 a piece. All right, on that dip they went all the way to zero, and then since then it's up at $20 a piece. Could have sold them at 10, so that's 100% gain just from here to here. But the real gain would have came from swinging to that higher position and selling a month out. All right, that final month of this, you can open up and do a little bit of homework tonight. I want you guys to do this. Okay, I want you to take 10 random stocks, open up their options chart, look at their history on this. Okay, and forgive me, I was on puts. Open up the options history on this, look at the chart history, and I want you to look back and see when it was sold, because 99% of them are going to be sold within the final month. And the reason that is, if you have watched Emily's video about time decay, that final 30 days, the options curve literally just goes almost straight down. Okay, it absolutely destroys options. So on this date, let's say 6/10, all right, you come back to the normal chart. This is on June 10th. Let's look at what this thing was. All right, let's go to the daily and we'll go to June 10th. So this stock was worth around $3.30. All right, so it's 20 cents less than it is now. Yet the option, even though it doubled from this low, is still worth near zero from $100, and that's because of that theta. So the real way, and the way that we are going to be able to do this, and what we're going to do extensively, is you come in at this bottom. Now this did dip under support off of earnings, but it did recover pretty quickly. Okay, if you were to have bought here, say on 5/13 at 251, swing trade it to resistance at 375, then you cut for your gain. All right, take your gains out, but leave the profit in. Okay, and make sure that your profit is in shares and is in increments of 100. Now you can sell a call against your equity. So no matter which way it goes, either it goes up and you have to give your shares up for $5 or whatever call you sell, $3.50, $4, that means your shares are still going up. If it goes down, it's hedging you to the downside. So in this case, let's say September 17th. All right, let's go to these calls right here, because these are a month out. You can see that these were $77 on the 2nd. Already, just from sideways action, they're worth 45. So they've lost half their value for the September 17th calls already, all right, on that last spike. So as this gets closer to September 17th, and this drops to 270, 260, anything under 3 or whatever your break even is, you can see that these move quickly. All right, you want to sell on the spikes, and if you wanted to, you can buy it back the very next day. Say you bought it, you sold on the spike, you sold it for $77 per call. Say you have 1,000 shares of it. All right, you bought it for $1,400 when it was at $1.40. You can sell 10 calls on that. All right, times $77. That's half of your value that you spent on all of the equity to start with. All right, then it goes down to 36, or it goes sideways and ends up going to zero. You're going to collect half of what you paid for all of the shares just by selling calls against your equity to September 17th. All right. Now, if you get another spike in the future and you do the same thing, now all of your equity is covered. do another spike in the future and you sell again, now it's all profit. You see where I'm getting at. So you can do this with virtually any stock. All right, I'm going to show you not just in an advanced way, but I'm gonna break this down very simplistically. Let's go to SKLZ, because this is one that I'm actually going to do this on. All right, right now I am cost averaging in as low as I can. I'm not really worried about percentages right now. I'm not really worried about any of that. I'm worried about how many shares do I have. We have 70 so far. I would like to have 200 when it's all said and done. I do think that we do get a spike to at least $15. If we can get an average of close to 10, average down pretty heavily on the downside if it goes that low. There are certain things that look like it could bounce. It's oversold. MACD's getting a little closer. We're reaching major support levels. Even though it lost some support, it still has plenty down here in the 1050 all the way to 1030 range. So let's take a look at the call history on this. Now, this is 1050 right now. So say you buy 100 shares for $1,050. All right. You come back. Let's just look at the August 20th calls. These are worthless. So let's look at the $15 calls, because that's what my price target is, right? These were, you got to keep climbing up to go here, $754 a piece. All right. Let's go to the daily so you can see it easier. That was just on the last spike on July 1st. All right. So that was a month ago and some change. $780 for a single option. You go to the spike before that, and it's $1,000 per option. That is virtually what you're paying right now for 100 shares of this. Now you go back to the big spike, and these were $3,000 a piece. Okay, so the plan is, not only are we going to swing trade this with 200 shares for a 50% gain, we're going to trim 100 shares, all right, to be able to have 100 shares for free. Then we're going to sell a call for, let's say, $800 against our equity, depending on where it's at and depending on what it's showing will depend on which call we sell. Maybe we sell one even, in the money, knowing that it's going to go down and they'll be worth even more. You look at the $12 calls or the 12.5s, these were $3,000, and right here they're $1,200 a piece. It still went to $10, and these calls still went to zero. People will always buy these things on these hypes. There's a lot of spike buying FOMO buyers out there. That's just the truth. So if you look at the last time that it ran up, so now we swing trade to 15, we sell a covered call with our free shares, and when this goes to zero, it literally covered just in a month the cost of your entire position. That's just for one. Now, if it goes sideways, you're still going to go to zero. All right. So it doesn't have to necessarily fall. It just can't be above your strike at expiration. It could be under it by 5 cents. All right. And the closer it gets to that date, that theta is going to kick in and just tear these options to pieces. So you always want to get about a month out. Then when it's hitting resistance. Okay. So right here, we would, if we sold a 12.5 call for August 20th. So this is going to expire just within a couple days on June 9th. Let's look at skills on June 9th. So there you go. That was that spike all the way up towards $25 now. So again, we're just using this for references on the last 3 big spikes we had, not this big $46 one here. You don't even see those open no more, but I guarantee you it's a lot more than 1,000 to 3,000 right here at 25. The thing was probably worth 10 grand over here. So if we buy this at 10 swing even to this $15 range, I'm telling you, you're going to be able to sell these things for $500 a piece, no matter what. Okay. And then we can consistently sell these 30 days out, and we're always going to sell them on downtrends. All right. And then we'll use our profit. We're going to add to our shares on each downtrend with our profit from our covered call. And then on the next spike, we get to sell more contracts. Okay. So it's just going to be a snowball effect. And you especially want to do this with stocks that you think can long term be higher than they are now. All right. Now, this may have had a huge run and settled out near 10. You see a lot of stocks now that were at $10 or at NAV price for SPACs. And a lot of these things have got crushed all the way to $5. But you can't put all of them in the same category, although all growth stocks are essentially following each other right now. If you look at Jumia right now, it's in the same place, right? Same chart. Big run in February, sold off all the way down here near support. Okay. They literally all have the same chart. So whenever these do recover, and they don't just go down forever, you're going to see spikes in these. It's just a matter of when. Okay. If you would have bought Jumia down here at $4, at its trend line, even though it did spike to 25 right here, it came all the way back to its trend line. This thing hit $70. Could you imagine what options on this thing cost, back on that big spike? This only dates back to, it does go back to February. They're $4,000 a piece. I think it's $2 right now. Okay. So that's a $25 call. You can go to different ones if you want, 20, whatever your entry was. But the key is not to buy it high and sell it low. You want to buy low, sell your calls high, then hedge yourself low. And you always want to keep this thing right around the 30-day mark. So going back to skills, and not all of these are going to be just for covered calls. Some of the trades that I make are just going to be swing trades. All right. And I know that they're volatile, and I know that, they've jumped up and down. You can look at TTOO, and it held this level forever. And it seems like it's a lot, but these are volatile. This thing's very oversold down here. It just went from $1 to 123. We were up 23%. Now we're slightly down on it. I mean, it's going to be volatile. I don't like the fact that it lost its long-term support level, but a lot of things did over the last couple of days, and it still has levels underneath of it here. Still has 99% efficiency on its COVID testing, and COVID-related penny stocks were definitely moving today. The very first post this morning was, we'll jump in to the watch list. CLSK, I was showing that it was getting some volume at the end of the day, and I do want to go over that apps play here in a minute. So I was looking at hedges today. All right. The very first play I was looking at was a quick Apple bounce. It did bounce directly off this line, but I was looking at hedging on the spikes, and then I was looking at VRPX. This is at 9:27 a.m. Ton of volume. Then I mentioned it a few more times. VRPX still getting a ton of volume. VRPX broke out at open. So if you look at VRPX, and it's something that we covered live today, I even showed you guys a possible entry on it. I had a nice trend line drawn up on that, so you can see it right here. This is actually where I was live and showing you guys it was going to break out from. This exact spot right here. I've not touched these lines since we were live today, okay? So here was the first run. Here was the wedge, the consolidation. There was the break. There was the hold of the break, and then the push all the way to $14 from $4. Then it held this level, got rejected at 16, came all the way back to 12. Turned, retested here, got rejected again, but after hours broke through. Didn't have enough sellers after hours, gapped all the way up to $21. So this thing was a high volume, super hot mover today. All it did was consolidate and break. And if you look at it now, I mean, it hasn't even lost trend even still. It just is consolidating and pushing higher highs. Now, I don't think this will last. I think that here within the next day or two, you're going to see this thing tank like all these penny runners that, 10x in a day do. But I will show you one other one real quick, only because I had somebody ask me earlier about this one in specific. Let me read. Let's see. No, Griffin Garcia, you do not have to wait until expiration. You can buy it back the very next day if you wanted to. Okay. So say, for example, if you sold a call right here and it went down the next day 50%, you can buy it back. You can buy it back the same day sometimes, because they're moving just as fast as buying calls are to the up or downside. The only thing is, selling calls is just so much more favorable to you, because let me just show you an example. Let's look at Boeing. Look at its current price, 221. Go to Boeing. Let's go to anything close to its price. All right. And you look at the last. So $1,700 to $179, now $265. All right. See how dramatically this fell off over the last since 8/12. I mean, that's a huge loss, right? $1,700 per contract to $179. You can look literally at anything, even some that are up, right? Let's look at Apple, since it's been up nonstop, right? Apple is up right now, just broke out all-time high. Look at the Apple 150 calls, and you're still going to see this thing down closer to expiration from 255, because that final week, these things are really going to come down hard if this comes down at all, because now you only have a couple days left for this thing. It has to be over 150. So the closer to the expiration, if this goes down even 50 cents or $1, this thing is going to drop dramatically all the way to, $43 like it was right before that last spike. But most of them, look at the 1 hour on it, even now, even with all-time high, okay, I just showed you the Apple chart, it just hit all-time high. It still was worth $520 back here on July 14th. So if you sold the calls over here, even with it hitting all-time high, right, it's still way down from where it is, because of that theta, that final 30 days. And no matter what, people are always going to buy these things because they're trying to make this 74 to this 163 like all the scalpers in our room do. They're not worried about all of this. They're just trying to make that quick spike and that quick double up, or that quick 40%. All right. But for me, what I'm trying to do is sell these highs and let that final 30 days bleed these things out. But you can't do that by buying at all-time high. You do that by buying near lows and swinging to at least, halfway back to its previous price. The worst case scenario. Okay, so let's show you this real quick. Let's say SKLZ. We'll go back to skills because that's the one we're buying. Oversold. You see it crossing on the 1 hour. It looks like 1050 was it, man. I should have made that final 150 today. I think this thing's gonna move up back towards 12 off this level. You can see we're very oversold. Just needs a little volume. Just had that article drop about it. If you guys didn't read this earlier, Skill's share price is misaligned with its second quarter revenues. And if you go on to read this article, they have no debt. All right. That's one of the big reasons why I bought this as one of our plays. This company has zero debt. They're making 608 million gross marketplace volume, 692 million in cash balance sheet at the end of the quarter. All right, 52% year over year, 89.5 million, company record. And then if you look at this, this was the one that stood out the most. Skills is pleased to report strong revenue growth for the 22nd consecutive quarter. Just because they went public recently does not mean they haven't been a company for a long time and for years to come. But they continue to deliver and they continue to grow. And the numbers haven't changed at all. The only thing that's changed on it is the stock price, right? So that's one of the big reasons I'm trying to get this thing as low as I can. This thing was $46 at its high. For 22 straight quarters of growth, for it to be near, all year or all-time low, the lowest it's been at its SPAC price was $9.83. I mean, we're getting close to those levels right now. This thing was just $25 not that long ago. For us to reach $15 really is not a stretch at all. It's almost a certainty as long as you give it the allotted time that it needs. So to answer DJ's question, what is the worst case scenario? Say I buy this at 1067 and I go into options. This thing goes up, all right, and I sell this $15 call, okay? Say it spikes and these calls are now worth $200. Say the stock price is $13 and these options go to 200. I sell a $15 call. If by expiration date skills is over $15, they will execute. If they execute the option, you'll have to give up your shares at $15 a share because that's the option that you sold. If you sell a $20 call, then you got to get rid of your shares for $20. So either they execute at 50% higher than you bought it at, or 100% higher, or this option turns against you and you make the premium off the call. Now, the worst case scenario is if you do it incorrectly, okay, by selling options at the low and then this going against you this way. Now the option's going against you because you sold it early when it was worth nothing. Say you sold an option for $5 and it goes to 200. Now, that's going to put your option negative $150. You never want to sell these things super low like that. You always want to sell them, like I said, right around a month out, month and a half out, because this is when that theta burn comes in and kills them. And I'm going to make sure that you guys don't sell these things at stupid low prices. What's the point of selling a covered call for $10 or $5? You're not going to do that. You're going to wait for one of these spikes like it did here in July, and you're going to sell this thing, if not for 200, for 800 or 1,000 up here. This is on that June spike, though. I'm not saying that we will get back to that level, but these were worth $1,000 per option here. If you would have sold a single call there right now, even if the stock fell all the way down, you could have sold it here and bought it back right here at $435. You can buy your option back at any time, just so you guys know. Yeah, you would lose your 100 shares, but you would lose them at whatever you sold the option at. And obviously, we're going to be selling them higher than what we bought them at, right? All right, when we buy a covered call, do we have to take action before the expiration date in order possession of the shares, or will it automatically fill? If they're in the money against you and they decide to execute it, then yes, they will take your shares at that price. But what we're doing is, all right, so I'll tell you this. There are two ways to do it. I'll tell you the best way, personally, from experience. Because I've had a few go against me, right? I'll give you an example. I had one I sold for like $800 for one contract, right? This thing tanked all the way down. It was worth nothing. It was literally worth like $5. I could have took a $795 gain on this thing. And it had like a day or 2 days left until expiration. This thing had to go up like $20, right? No way. So instead of just selling it at 0.05, and the way that you do is you just buy the option back. If you sell a call here, so you just literally sell, you go into options, it's just like buying an option. You click $15, but instead of buying the call, you sell the call for whatever it's worth, okay? This thing went all the way to 0.05, and I held it. I was just gonna let it expire worthless, but the next day it got major news and skyrocketed. It almost went all the way back to the strike. Now, I didn't lose my shares, but the option was worth like $500 now instead of 0.05, all because I didn't, just execute and buy the shares back at the lowest, right? Okay, so Joe's 50th birthday, what does in the money mean? In the money means, so say for skills, it's $10.67 right now, okay? So I'm gonna pull up this option chain. Here's 1067 highlighted on the screen. Anything under this amount is in the money. Anything above it is out of the money, okay? So if it's 1067 and this spikes up to $13, see how all these options are worth nothing above it, right? Because by August 20th, the probability of this hitting any of these is close to zero. But, 30 days ago, that wasn't the case. You can even look at a $20 call up here that's worth nothing right now. And this was definitely worth something. This was worth $2,046, and it went to zero for them because people were selling these calls up here and they held it to expiration. Now it's worth nothing. Like there's no way that skills goes to 20 by August 20th unless a short squeeze happens. Wall Street bets or something like that pumps this thing. But no way, very, very unlikely that it makes it to $20. But had you owned 100 shares of this stock, you could have sold a single $20 call for $2,000, $2,600 on 2/8 of this year. Okay. And but you're selling August calls at that time. You would have had to hold that thing for a long time. I wouldn't have personally held it all the way to expiration. I probably would have just bought it back right in this range. As soon as it kind of bottomed out at $100, I would have took that $2,500 gain and not even allow this thing a chance to recover. Okay. So sometimes when you sell these calls right here, they come down, you see it starting to turn on you, you can always just buy the call back and you get to keep the difference in between whatever it is. Okay. And some of these are worth a ton. So the reason I'm even showing you guys all this, and I'll show you because this is a really good example of it. All right. At Home Group, I called this to the group in December of this year, right here. It was a pure technical play. The chart setup as well as the company fundamentals looked perfectly fine. This was in a perfect breakout pattern. Okay. You can see it holding support here. You can see it test the downtrend many times. It turned and broke the downtrend. MACD cross, RSI up, volume. Okay. This is at $14. This thing broke out, held its levels, pushed all the way to $38. Now, this also just got bought out by another company, but the point is the stock more than doubled. Imagine how much a single option on this thing would have cost at $38. A ton of money, right? At $14, not so much. Now you're able to sell this company for $45 calls for, you know, a couple $100 or something along those lines, right? So what I'm trying to do with you guys is not only have you sell covered calls, I'm trying to have you sell covered calls with free shares, right? If we get a perfect chart set up like this and we buy at 1430, it breaks out to 28 right here. That's all that is, one breakout, 28 bucks. Sell your initial investment and only keep your profit on the break. Now you have just enough shares to sell calls on each high. So you could have sold a call here, sold a call here, sold a call here, sold a call here, and every single one of them would have went worthless. So your free 100 shares now are essentially going to make you money for the rest of your life, whether the stock goes up or down, because you'll always be able to just sell that call. It's like a dividend almost. But if you're picking and choosing, and a lot of these companies you think have long-term growth, and I'm not talking about just for the next couple months, guys, you could keep some of these forever. Imagine, now I'm going to just show you like, you know, a crazy scenario, but look at AMD's chart. This thing was $1.61. Okay, imagine if you bought this at $1.61. Say you bought 2,000 shares of it, and it swung to $3 right here. You kept 1,000 shares, and you just held on to this thing through ups and downs because it was just profit, right? This thing just hit $122. Imagine, look at the calls on this now. You could sell, let's say, a December call, or let's say November 2021. This is at 107 now. You can sell a single call on this for $900, right? When, you know, this was $1.61 at one point in time. 100 shares of this would only cost 161 bucks, and now a single option on it is 900. You see what I mean? Some of these things are going to grow over time, and with your free shares, the covered call is going to hedge you for the down days, so you're still going to make money on them. And then it doesn't matter if it goes up or down, if it's you're just holding profit. Okay, we're only worried about selling the call, and some of these companies may turn into great companies. I'm not gonna, now some of them are just swing trades. I will identify the ones that I'm long on, and that I think can, you know, turn into great companies. Like, for one, I think Aqua Metals has a shot to be a good company. All right. This company right here, I easily think that it will one day go back towards $8. This thing's at $2.10 right now. It is almost at, it's right there at its bottom, right? You can see its lows of that May 11th low. It's right there. Now, does it lose this level and come lower? It could. You know, there's no guarantees in this market, but from this $2 level, just this little spike right here, this is $4. Okay, so we swing trade this. This is 100% profit. We keep our 100 shares right here, man, through thick and thin. Let this thing just be what it is. If you believe into the company and you think that Aqua Metals has a shot, you know, to be a $50 stock or something one day, then what's it matter if your free 100 shares go down a little bit, right? So Aqua Metals is a pretty good price down here. And I got a lot of due diligence on this, on how they're tied to Tesla. And as EV cars become more of a common thing for the American people, and as tax credits and things help people to get more, they're going to need companies like this to be able to recycle these lithium ion batteries. Lithium ion carbonate, they have all their licensing on them, and they're stationed right next to the Tesla Gigafactory. So this can definitely be a company that has long-term potential. All right. Nobody believed in Apple. They were laughed at for many years back here It shows 11 cents, but they've split so many times. If Apple had never split, it would be, I believe, 60,000 a share right now. It'd be right up there towards 60,000 a share. But it's done so many stock splits in its history that, you know, each time it splits the stock, it's going to split its whole history. So, you know, that's why it shows it had such a low price. But at one point it was very low. And that's the same thing for Top Shifts. It's going to be the opposite, though. It's going to show that it had massive value in its history, but it doesn't. It just splits its history the opposite way. This is a reverse split. Yeah, Aqua Metals, I like it, man. I like what they're doing. I think it got killed at the end of the year. I think COVID crushed it down to nothing. When the EV revolution came and this thing ran up and Joe Biden's presidency came in, it had a ton of volume and momentum. It has since kind of bled off, right? But we are starting to see not just a bounce, because this is a level it bounced at last time for all these stocks. Look at Skills, bounced at the same level. You look at Aqua Metals, bounced at the same level. You look at Jumia, bounced at the same level right here, right? They all got the same chart, all growth stocks, but I'm not looking for a bounce, okay? I want a reversal pattern for some of these stocks. There's a big difference between a bounce. This is a dead cat bounce. This bounced and then just continued to downtrend. All right. We want a reversal, not just a bounce. We want to start to uptrend. If you look at the RSI on it, though, look at the RSI, even when this was, you know, rocket shipping towards $70. This thing has always been overbought in this range. This is the first time in a while since, you know, this last bounce down here that we started to get oversold. If you look at its history, oversold, and this thing really ripped off of this down here at this $14 range. I remember in December talking about this thing at $14, and we're talking about $20 calls on this thing, and this thing goes to 70. So we're looking for companies that we think can be great companies in the future, that we can swing trade for profit, that we can sell calls to hedge ourselves on, to give ourselves more shares. Then at some point, guys, you're going to have about 1,000 shares and you could sell 10 calls at a time. Okay. Then say that stock creeps up and gets higher and higher and higher. Now you're selling 10 calls at a high price. Then if it comes down and you collect 10 premiums, you can buy even more shares. Maybe you can sell 20 the next time, right? It's just going to be a snowball effect. Each time you sell those things like that, and I look at any one of them, literally pull up any stock, especially any growth stock, and look at its last month and tell me if that call hasn't been crushed. Even before growth stocks really started pulling back, this final month right here just destroys these things. Okay. And you can even do it at, you wouldn't want to sell it at $24, but at any time on the way up towards $365, you could have sold a $300 call, and any drop in that price at all, and this thing's dead. Okay. And that goes with even value stocks. Look at Home Depot. It's at 320. Pull a 320 call up and just look at the last, the value on it, right? It was worth over $3,000. It went all the way down to $277. Okay. Went back up to 1,800. Went all the way to $153 through earnings. It got IV crushed through earnings over here. So we went from $3,000 for one call to $153 per call. Now it's worth $305 because it's close to that 320 range. But, you know, almost every option you look at, and this is near all-time high that it was showing that, and it's still through earnings, these things are going to get killed. A lot of them will skyrocket, but most of these will fail. All right. With the 2 option contract we purchased for the 5K challenge, went to take another action order to receive those shares. No, so for this isn't a covered call yet. All right. This is just a regular call. For me, I think that Digital Turbine is a good company. I think it's gotten destroyed. It's on a major downtrend. It is near major support. If you look at the 1 hour chart on this, let's see, this is 1, 2, 3, 4, 5 days ago. This thing was almost $70. All right. This thing is at $50 right now. 5 days ago, this was $20 more than it is now. Okay. That is a sell off. So we're extremely oversold on the 1 hour. We're getting a MACD cross on the 1 hour. If you look at the daily, this thing looks like it is primed, okay, to push off of this level. Then if you go to the daily chart on it, we're nearing the end of a long-term major consolidation pattern, okay? This probably will bounce off this level and consolidate some more, but this thing is likely going to break out sooner than later. This is nearing the end of consolidation. It's at $50 right now, okay? If you look at anything, if you look at tip ranks, you can look at any stock screener you want to, okay, and just look at apps, and look what they have this thing. All right, the average price target is $107. We're at $50. The lowest is 83. The highest is 132. So now I'm not talking about months ago. I'm talking about 5-star analysts just 8 days ago giving it $115 price target, okay, or 105 last month, 83 for the hold. Yeah, maybe Austin's right, because growth stocks were falling. He still gave it an $83 price target, but Maxim Group just gave it $132 price target. All right, so you can take a look at the stock. Its projected forecast is between 83 and 132. Based off of, analyst ratings. I'm going off of analyst ratings as well as fundamentals. And the fundamentals, I pulled the trigger a little early on it, okay? I pulled the trigger because it's nearing the bottom of this channel. This one still can come down to this $47 range. This is the bottom and its last support level here. Now, I'm betting essentially before it happens that this can make a small turn to 55, which is not out of the question. We literally have till September 17th, okay? This is 5 days and it went from 70 to 50. We have 30 days to go back up $5. Even if it comes down a little bit more or not, I like my odds that I can get to right here, all right, within 30 days. You look at the 1 hour chart on that thing, that's literally nothing for this company. It stayed steadily near 80, and before that, this thing was getting rejected at 102, 97, and 92. Its last rejection was at 81. Okay, now we just sold off. We're all the way near bottom. It's at support, and it's oversold on the daily. It does not have a daily MACD cross, but on the 4 hour, this gives you the clearest picture of it. Okay, the 4 hour is oversold, and the MACD is turning and about to cross right now. Okay, this looks to me like it's going to bounce right off this bottom. Maybe that bottom is right here. Maybe it can come a little lower, but it's somewhere within this range. I may average you guys down on the call, but they're only $225 for this $55 call. Now, I want you guys to take a look at something real quick. 215 and 220, right? Take a look at how much this is worth not long ago. $200 right now, just a week ago, it was worth $1,400. Okay. Before that, $2,700 for a single call option, right? Before that, 4,640 on that big spike we had back in February. If we get any spike on this thing, let's just say this is 8.9. Let's look at what the stock price was on 8.9. Okay, this is when this thing was $1,400. So we'll go to apps on 8.9. Right here. So this option at $68 was worth $1,400. This was 5 days ago. It's right now at $200. Not a lot of time decay in theta caused that. That was caused by this bludgeoned stock price and the IV coming down on it, okay? But this thing has absolutely got crushed since that earnings call, all right? So they still made 212 revenue. We can get deeper into the earnings if you guys would like on a later date, but you know, even after the earnings, let's check the recent news on it. Digital Turbine earnings and revenues top estimates. Okay, so it beats earnings 0.34 per share, estimate of 0.31. So it beats earnings and gets absolutely destroyed by $20 a share, okay? Because people are expecting a beat. Now, if you remember, it wasn't that long ago that AMD fell right after earnings, like a lot of things do, right? Here was its dip from 95 all the way to towards 88, quick dip after earnings, and this thing rocketed to all-time high. Now, apps is a growth stock, so it's been following the same pattern as the rest of the growth stocks, but this is very low, just beat earnings at support, and $1,400 if we get back to this range right here, which it was just at. So I'm taking my odds on that. That is a riskier play. You could absolutely, okay, Mike Baxter, let me see. You know how it's not recommended to buy options on penny stocks or low volume biotech, et cetera, because there's no real open interest as I also apply when selling calls. Yeah, absolutely. Yes, you do not want to sell calls if there's no open interest on them, because you're literally not going to be able to get rid of them. On these things, you want higher volume, you want a tight spread, you want to be able to sell that thing easily. Now, sometimes it can be favorable to you. Only in rare instances, though, okay? And I hate to even like say it because it would sound like I would, you know, be talking about somebody that we all know, and I'm not. But say, for example, if you were really popular and you could call a play and it had a wide spread, say $20 spread, say 0.50 to 0.70, right? You buy it at 0.50, you're able to get it fill, and then you call a call on that, and then you yourself get it to flood with volume, and people start overpaying for it at the ask, and the ask is 70 and you bought it at 50. You literally just made $20 per option, and if you buy 50 or 100 of those and you have followers that are buying it at the ask because it's what you called, you could literally just sell on your own followers for $20 per contract, right? I'm not saying anyone does do that, but with a big spread like that, sometimes, like on Moderna the other day, you can ask Emily, we just put a bid out there just way under what it was. It just randomly filled, like somebody just market sold it. And sometimes you can get a good fill that way because it's going to go to whatever the bid is. But most of the time you do want that tight bid ask and you want some volume. Believe it or not, the most traded stocks in the stock market aren't ones that you would really expect. A lot of them are going to be metals, and gold are very highly traded. You can see these 20,000 open interest, 11,000. You go to September 17th, 18,000 open interest. Or you go to FCX, you can see open interest of 25,000, and on September 17th, the open interest 23,000. You look at Nokia, believe it or not, it has a ton of open interest, 35,000 on the Nokia. If you go to the leaps on this, it has the highest open interest in the entire stock market. January 22nd, $10 calls, 344,000 open interest, which is the highest there is out there. So a lot of people think that Nokia is going to $10 by January of next year. These only cost $11 right now. Maybe somebody's just waiting for this thing to go to 0.15 and they have, 100,000 options. Who knows? A lot of people have a lot of money out there. So, like I said, the apps play is just a regular call option, but this thing has a shot to lose your $200 for us. But the risk to reward is there. If we have one solid green day in the market, this thing can hit $55 in one day. We have 2 green days that could clear our strike and have a month left on it. Okay, so I just feel that it's sold off too hard, and I have to take that shot at this thing at support after a good earnings. Oversold, so that's what I'm going off of. Now, typically, you want to wait for an actual cross. Okay, it doesn't necessarily have to be on the daily chart. If you're trading intraday, because we do actually have a small cross on the 1 hour. But if you look at my trading view, it doesn't actually have it. It's still a sell right now, but it is very close. Right? You can look at apps right here. You can see it right there, man. It's very close to this last support right here, but here was the moving average that it lost. So, it does need to reclaim its moving average. You can see that, it was a MACD cross to the downside. It's going to take one strong day to turn this thing. So, this was a sell all the way up here at $100. It was giving sell signals all the way up here. And then it gave a full sell signal right at 59. Straight down towards this 50. These PTs are just random on it. It's not saying it's going to go to $36. It just randomly puts PTs, down the board based off of levels. So this is at 48, this last major level of support. So if 48 is lost, I would probably cut that trade. But so far, good to go. Oh, that's how he said, how do you average down on an option? Yeah. So say I bought the 55 at $20 today. Say I got a $25 fill. Say this goes to 0.10 within 10 minutes. All right. And they do, especially like same day expiry options, Lotto Friday. Okay. You buy another one. Say if you bought 3 of them at $30 and you came down, it goes to $10 an option, you buy 10 more, it's going to average you down based off of a total average. 3 at 30, 10 at 10. So you're going to get closer to like $15 average on this. So it's easier when this turns in your favor for you to get out of a bad call, or, to really get a good average in on a call. Typically, if it wasn't like a challenge account and we were just really going for this, I feel confident that this play is going to bounce within 30 days. Okay. Now this is at, my bad, that's the 24th. This is at 215 to 220 now. It's down $10 already. Like I said, though, it was $1,400 last week. These are going to be very volatile. If this were to go to 185 or something at $48, I personally would add like 5 more of them at the low and average this down towards 170 or so. That way, one small spike on this puts this back over 200. But I understand not everybody has, thousands of dollars in their account to be able to spend on options. So I'm just really just buying this thing at its lowest point that I feel that it's at. I haven't looked at futures yet. I know that crypto has definitely been falling. So we can look at Sol, and we're going to go over crypto on another night. I want to trade live crypto with you guys. This is one I was looking to short sell the other day because it just absolutely went parabolic. This thing was at $2. This thing hit $75 over here. So if you look at it, it's back to 67 on the day. This is a 1 minute chart. Let's look at a 5 minute chart on it. Let's see. This thing hit $75, all right, today. And now it actually does have a buy signal on it. So it sold off. It double bottomed right here. Got a buy, and it's pushing up right now. So I wouldn't mess with this thing yet. But towards $76, man, if you look at this thing, this is very high for this stock. $75, man. This thing was literally within the last, look at the 1 hour chart on it. This was $20, not very long ago. This thing went parabolic up there. So it's still got to sell on the 1 hour. Only on a short time frame does it have a buy. It did lose its major moving average right here. So here's a rejection. It's coming up. We'll see if it rejects one more time off of this. But it's nowhere near its long-term moving average. So, this can come all the way back to $50 for a short sell on that. For Everett, we're not going to. We're just going to sell the calls because if you were to buy 100 shares at a stock that's $50, you know what I mean? That would take up like most of that account. So we're just selling the calls for it. We already sold half of them the first day that it went up 25% or whatever. So here, it just looked like a breakout pattern to me, and it did shoot up to 48.83. It's still holding this range pretty well. But look at the daily chart on this, and this is what really intrigued me about the stock, is it's right at a break point. Okay, this is $50 right here. So if we do get a breakout right here, it's going to go straight in the money. If this thing goes to 52, this option is going to go up a lot. So if you look at the 4 hour, we're right at this point to where we can push up and break out. So $50 is just essentially right at this downtrend. And if you go to September 17th, they were pretty cheap, $39 to $41 now for the calls. But if you look at the last time that this was on a spike right here, okay, these options were worth $200 plus, $510 at its high. So, we got them for like in the mid 30s. So one quick spike on this and this thing can go to $100 or $200 easily. I'm just going to sell the option for $200. That's it. That one isn't a covered call or anything. That one's just a regular call option that I'm buying, at 30 and trying to swing to 100, hopefully higher. We'll see by then. With the market being as bad as it has been the last 2 days, this stock has held its own pretty well. If you look at the 30-minute, it's really just went sideways as the market has gone down. So I'll take that any day. The last 2 days, it's even a little up from where we entered, considering the market has sold off considerably over the last a couple days. The NASDAQ, before I jump off, let me show you guys where things stand on the market as a whole. So here's the 1 hour chart on the NASDAQ. It does look like it held this support level here. You see the NASDAQ straight free fall right here. Okay. Then it bounced. Then it opened low, fell off this morning, kind of held this level and kind of bounced towards the end of the day. So it does have two support levels right here for the NASDAQ. And we are still closer to all-time high than we are not. Okay. So hopefully it doesn't lose these major levels and we have an official correction, which would make it come probably down into this range. And this would bring a whole lot of stocks down with it if it did. But SPY, same thing. Look at the 1 hour on SPY or the 4 hour. It's really not down as bad as people think. You look at the daily chart on it, it's barely even down, right? You look at the daily chart on SPY, it's nowhere even close to any of these dips that we had in the past that are a regular thing. It's literally like a single candle down. And the Dow Jones took the bigger hit today. All it is down from all-time high. Okay, this was literally all-time high on Friday, highest it's ever been in history. So it's barely down off of that level. So you look at it right here, this was all-time high. We're just now coming to some of these levels that it was at just a couple weeks ago, right? We're having a little bit of pullback. So it's very normal from all-time high. All-time high is basically like an indicator. Me and Emily joke about it, is as soon as all-time high is hit, just buy puts on everything, because literally every time, if you look back in history at it, right? Check this out. So all-time high, the market crashed, right? Here's the high, crashed, high, it crashed. We hit all-time high right here, market correct, all-time high, market corrected, all-time high, the market corrected, all-time high, the market corrected, all-time high, and the market corrected. These aren't even full corrections. Some of them were, most were not. So a 5% pullback in the S&P 500 is not a big deal at all. Yes, Mr. Roberts, we will sell them. I sold one of them already. It went up the very first day on that. And it wasn't necessarily that I thought that was like a huge gain or anything. But while I'm doing this, I'm also teaching. So it's in the future, you're going to want to, and we will, Garcia. In the future, you're going to buy 10 contracts sometimes. I want people to get in the habit of trimming for profit. Trim for profit. On spikes, you trim your position, okay? And then when you have those down days, because you already took some profit, you're not just getting crushed by holding an entire position. So if you look back at it actually, and you go to the MO, let's see, 17% already. Trim one for 25% gain, holding the rest, set stops at 0.30. Okay, so make sure you follow that. I think it can go higher. It's on its first turn. This is when it was $45. You know what I mean? But it went up 25% for a second. And then we put, our entry pretty close. It got that article, 2 big dividend stocks with a nice yield. One of them was MO, as you can see right here. So it got this article on it, did get some news. And then you look at it, I got it for $35 for each one. So the stop loss, it's at 39 right now. It's still above our entry, and the stop loss is $5 under our entry. So we already sold one at 45. So we can't even take a loss on that play right now, no matter what. It's either going to go to 100, maybe $200 an option, or it stops out for a $5 loss. But if you look at the chart on it, it looks completely fine to me right now. It looks like it wants to break out. See this wedge pattern right here? I can show you hundreds of charts that I know just off of memory that this thing is a telltale sign of a stock about to break out. Okay, I'll show you the top 3 right now. Tesla right here, doubled. Noravax, wedge pattern, doubled. You look at any of them like that. Moderna, wedged here, broke all the way to 500. You can see my purple lines right there. That was the breakout levels for Moderna. It easily broke those levels. See if you can see it easier on that one. Yeah, so here's the top, here's the top, here's the top, there's the break, there's the hold of the break, and then there's the push. That's how they always happen too, guys. Always. Look at any stock and you look at its breakout point, okay, and that will be the spot that it bounces off of whenever it recovers. Wherever it breaks resistance will become its new support. All right, so check this out. On Tesla, at all-time high at $900, I told everyone in this group that it would go to this purple line. Literally got laughed at. They were like, you think Tesla is going to lose $400 a share? I'm like, yes, I do. It's going to go back to its original breakout point, right? Straight down, directly almost to the dollar, to its breakout point, bounced right off of it. Came back to its break point, bounced off of it. 2 times it hit that level, okay? Look at Home Depot. Here's its all-time high. Here's its break point. This is at $299 to $345. Told you guys very likely $300 puts would come into play. It came directly to that $300 line and bounced off of it right there. You will always see this like that. It happens all the time. So, you know, things like FCX that we're buying at those levels, this is about to be at a support level soon as well. I love trading this stock. This thing crushes. AMD, so the purple line represents its breakout point. I expect AMD to come to $100. All right, when it was at 122, I'll go ahead and lock it in that at some point this is going to come to $100 and consolidate on this level, if not lose this level. Sometimes they can lose their break points, but it guaranteed is going to come to $100. All right, that's a fact. You can mark this in here. AMD will go to 100 within 60 days. All right, and you can, it's recorded, so can't hold it against me. It very, very, very likely comes to its breakout point, although it's a great company and the company has done great. Okay, so last question, Griffin Garcia, how do we prepare for corrections? So just like, I'll show you, I posted them this morning actually. So go to my watch list today, go up to these right here. See these right here? SQQQ, SPXS, SDOW, SOXS. Don't count the VRPX. That's the one that quadrupled today. But these 4, all right? Check these out. SQQQ. This is inverse to QQQ. So QQQ is a compilation of stocks. This thing is near all-time low since the market is near all-time high. But you can see their options went up 100% today. You can look at SOXS. This is inverse to semiconductors. 166%, 130%. All right, off these levels, because these are 3x leverage. Now, if you look at SQQQ, look at the daily chart on it. Look how high this went during the last market crash. Since this thing is this is the March 11th, 2020 crash. This is $164. Okay, $164. This is at $7.99 right now, because it's a 3x leveraged ETF. That's what most of these are. See it, bear ETF 3x. So if QQQ comes down, which is top heavy with stocks like Apple, Tesla, right? If this comes down hard, then SQQQ goes up 3 times what QQQ comes down. So we have things that work inversely to the market. There's a ton of them, actually, hundreds of them. So you have things that you can buy just in case the market pulls back that go up when the market comes down. Okay. In addition to the covered call strategy, because you want to sell a covered call on a spike, not on a downtrend. You can sell a covered call on a downtrend. You just got to sell it farther out of the money, or I'm sorry, farther out of the expiration if you think it's going to downtrend more. So say if I thought AMD was going to downtrend and I own shares of it, I would go all the way to, November and sell $100 calls for $1,300, right? They're worth $1,300 right now. They were just worth $2,600. Watch when November comes and tell me how much these are worth. I'm willing to bet any amount of money that these are worth nothing, or the one right above it is worth nothing. 2,600. This is going to be just like those ones that you've seen. That final 30 days is going to crush this thing. This thing is going to be worth like 150, $200 over here. It's still $1,300 right now. Was just 26.47 though. I'd say the 105 will get hit the worst, because it's going to go right to 100. So this was just worth 2,300 by November 19th. Just mark my words that if this goes back towards $100, this thing is going to go back towards 300 or 150, maybe go to zero. Definitely the 110. The 110 smoked on this one. So that's how you would do that on something like that. Now, the ones that we're grabbing, they're just starter positions so far. You guys seen I haven't bought a ton of plays in it yet, because the market just hasn't been in a great place. The market has not looked good for the last couple of days. I'm kind of letting things settle. Last month, we had a monster month. You guys look at the Google sheet, we had like 50% of that sheet go 30 to 50% just in equity. That's not counting any calls or anything we made. We had a ton of calls banking all month, just because we're having a couple down days, man. Even in this group, you can go back to just since this group started, and you're going to see gains all the way across the board. 384, the Tesla calls that crushed, the go went 500%. We hit a whole bunch of calls for the last couple of weeks. You're going to have some down days in there. Okay. Going to have a few down days. AMD at $100, looking at, these were like $90 calls. This thing went to 120, right? YOLO Tilray, we sold. Xpeng, SRNE doubled off this one. VIAC went to $46, right? And we sold them. The Nokia Leafs are deep in the money at $6. They were almost $7 at one point. And we were YOLOing CCIV at this level right here. Even pointed and circled the calls. We're buying $12 and $14. These things crushed off that level. You can see it right here all the way to 24. These went almost 400%. Got to take advantage of the good times when the good times are good. And you got to sit on your hands when the things are bad. All right. Because 2 weeks ago, it was nothing but brag plays left and right. Right. People hitting left and right, 100% gains across the board, 200%, 400%. Right. And now, everyone's panicking, but it literally wasn't a week ago when everyone was hitting on everything. X, 200%. SoFi, 60% we sold, right? You got to take the good days while they're there and not try to do too much when the market's going against you, okay? It's only been 2 days. Let the market chill a little bit, let it consolidate a little bit, sit back a little bit. As soon as we see things popping off like that again, you guys are going to get these calls again, all right? 100%, 70%, $1,000 on DraftKings, Fastly, 320%. These are all called in the group, man. The VIAC, the GoGo, you can easily see that was 100% gain for that one. You guys are going to nail these. And we're going to have plenty of them for you. Just got to not try to do too much. That's the best advice I can ever give anybody. I know how crazy that sounds. Don't try to do too much. Whenever you overtrade, if you ever try to make up your entire account back in a single trade, if you try to make up everything you've ever done in the last 6 months wrong in a trade and YOLO your account, you're going to go to zero. What you need to do is be patient, take advantage of the extremely green days, and on the extremely red days, kind of sit back, watch levels, set stop losses, make sure that the market doesn't correct your whole account. Stop losses should be in place on everything that you have. I think that the play that I called out, the Proterra, I sincerely believe that play is going to absolutely dominate, but it stopped me out twice for minimal loss. I'm probably going to get back in it. I still think that Proterra is going to go up as soon as this bill is signed. I think it's going to go up significantly, but I keep trying to find a bottom on it, and it stopped me out twice so far. So right now I'm just kind of letting it settle a little bit, and then we'll go and get our third shot on it. We're not going to have a whole lot to work with $5,000, not on $10, $12 stocks that I need you to buy 100 shares of. There's not going to be a ton of choices out there. I can only have you buy a few at a time, okay? But Proterra, I do believe, is still going to go up. I did stop out on it twice, and they were both very small positions and small losses. But, being safe right now, being safe while the market's not looking great. But if you stick around, you look at the last year, if you were to go over every play we've ever done over the last year, man, you guys just wouldn't believe some of the plays that we hit last year. We had one play, Fizz thing went 19,000%, man. 19,000%. AMD, yours truly, called $2 leap options, December 27th at $1.84 before this thing just hit $71. I called $2 leaps on that thing, man. Only 2 people I know held those things through and through. And one of them made a ton of money off of it. But I didn't even hold mine all the way through. I ain't gonna lie to you. That first big old spike to like $24, I thought that was as high as it was getting, man. This guy held on to his and hit that 71 or 73, I believe he hit it at the high. So he had more steel than I did on that play. But it's been like an hour and a half. I think I covered the basics of it. A leap option is just a far out option. Okay. Say, for example, Moderna sat here. This is from 2018 all the way to 2020. For 2 years, it didn't do anything. It stayed right at 11 to 15 bucks. This year, it went from $10 to $500. So at this time, at $11, say you bought a $20 call, and I went out and I went all the way out to 2023, right? Like 2 years out, and I just buy like a $20 call on this thing. This thing would have made probably $200,000. I mean, this thing is $500 a share right now. So you look at how much. Let's see what the lowest one is right now. The lowest is $105 right now. So at that time, $20 calls did exist. These are worth a boatload of money, right? You can see at $300,000 for a $105 call. Okay. At this was $13. It would have been probably $1 million trade if you would have bought a $20 leap when this thing was low down here at, $13. This is 2020. So you could have bought 2 years out a $30 call for probably a couple $100. And this thing literally would have made you $250,000. So sometimes leap options are where it's at. If you think a company has a chance to explode like that, I bet on the wrong one. I thought that AstraZeneca was going to be the one that beat and won the vaccine race early on. I thought that they would. They were the front runner for a while. Moderna backdoored everybody. So did Noravax. Noravax we bought at $18 a share, and this thing has gone to $331. So this was $3.54 this year. This thing went to $331. So those plays are here, and there will be more of these in the future because me and Emily bought both of these. The next trend will come. Trends come and go. The weed trend came and went. Solar was really hot. EV, batteries, metals, gold for a while. You've seen the cryptocurrency, everything explode for 2 months straight. NFTs, right? Biotech stocks. You're going to see these trends come and go, come and go, come and go. And they're all going to come at the same time, right? And they're going to go through their cycles. Weed stocks have sold off for 4 months straight. But there was a time though where Tilray was going from $6 to $60 in a week, and you could have made a boatload of money off of it. The key is averaging in very low on stocks that are gonna cycle through and go again, and transfer money from the patient from the inpatient. Okay, and that's all that is. Wait for the next cycle. Get some things in each category at its 1 year support level. You don't know which cycle is going to come first. Nobody here has a crystal ball. Nobody knows exactly what's going to happen. But what you can do is buy at long-term support, look at the fundamentals of a company, believe in the company, and hold on to your shares and see. Because imagine if you sold Noravax at $10 because it dipped to $8, right? You're down 20%, which seemed like a lot at the time, and it goes to $331. How many people you think sold that on this dip right here from 194 down to 78? I guarantee you 99% of people sold this right here. They never would have seen that. So sometimes the art of the hold, like Warren Buffett does, could be the best way. But that's it for now, guys. Starting to get raspy on the voice. We're gonna do a lesson almost at least 3 times a week. I'm gonna try and familiar guys with as many things as I possibly can. Whatever areas that you're lacking in or hurting in. I know that the last couple of days haven't been great. They haven't been great for us either. I hit on one play today from our own team, but me and Emily are sitting there watching things bleed on growth across the board, just like everybody else. We're not perfect either. We have growth stocks that we're invested in as well. We're watching the same thing as you unfold. We're just being a little safer about it. So, and we don't spike buy. But anyway, you guys have a great night, man. I appreciate all of you. And hopefully it wasn't too boring. Hopefully I tried to make it as understandable as I can. And the more you hear it, the easier it will be. And I really do appreciate all of you guys. It's the only Discord I've been a part of to where I feel like I truly do feel like it's family in there. You know what I mean? Because everybody is friends. Everybody's tries to help each other. Everybody tries to lift each other up, and we all go through the ashes together, and we all are gonna ride the high times together as well. We beat last year and crushed, and we're gonna do the same thing this year. Okay, so thank you guys very much, and we'll see you all at Market Open tomorrow.